The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and thank you for joining us today here at TFNN. Make sure to listen to us online at TFNN.com on Tiger TV so you can see the charts of all the trader screens as we're talking. Also, check us out on your mobile phone at TFNN.mobi. And if you haven't already, hop on over to TFNN.com. We got an event coming up right now, coming up in the Boston area. May 11th, we're going to have a dynamic trading strategy free live workshop sponsored by Nadex. And so they're footing the bill for that, so you can come in and you can learn from Dan Cook from Nadex. You can learn from Tommy O'Brien about identifying the trades and setting up trades. And also, I'm going to be teaching about Nadex binaries, spreads. I'm going to talk about deviation levels. You can use them on binary spreads, futures, and forex. I'm also going to team up, and we're going to go into diagnostic trading in a little more detail, and then we're going to close it off with risk and money management. There are still some spaces available, but it is filling up pretty fast, so you want to make sure you do fill in that form right now to reserve your spot. Again, it is free, but we want to make sure we have your spot reserved for you, so if you're sure you're going to be there, go ahead and fill in the form right now to make sure you get a spot saved, and you'll want to do that today. We're giving over $3,000 in prizes. We're giving away half ounces of silver, 1 ounce of silver. We're giving away diagnostic box spread analyzer subscriptions. We're giving away the timing the trade books. We're giving away the art of the timing the trade, a subscription to the gold report, and we're also giving away a subscription to Tommy's newsletter, the Market Insights newsletter. So again, make sure to go ahead and register for that and attend us and join us out there in Boston. Again, that is coming up really soon. It's going to be on Saturday, May 11th, from 8:30 to 12:30 in Boston, and we'll be happy to see you out there. We'll be staying at the Boston Marriott in Burlington. So Boston Marriott Burlington will be the one that we'll be staying at right there. And if you haven't done it and you need to do it, so you can start learning, okay, is go over to TFNN.com, click on that Nadex banner over on the right side. Once you've done that, then you'll want to sign up for a demo account first and get that going. And what you'll do is just right under our products, either in the main menu or at the footer there, click on the link Demo Account. And then you can fill in your username, first name, last name, phone number, and email address. Then click Apply for Demo. And they'll send you an email address. It takes about 15 seconds, literally. And you'll be able to get access to it right away. And you can get that extended. I can tell you how to get it extended for a year. Just hop over to the contributor page and email me, and I'll be happy to let you know how to get that extended for 1 year. So you have plenty of time to demo trade and learn. The market is a very expensive experiential teacher. It is a lot cheaper to learn and demo, and it's so funny because people, they go in and, we just want to make money. We're traders. But we need to know what we're doing and how things work, and and it's really frustrating because sometimes you start doing really, really good in demo and you're like, I could have made all this money, but you don't just want to, be lucky. You want to be right. You want to be consistent. You want to be systematic. You want to be basing it on technicals and not just on lucky guesses. And so, once you know that you have a consistent method that you can trust in, then that's when it's time for you to check out looking at going live. Okay. So go ahead and, fill that in, get that going. That's the first step. And then to get a live account, you'll click on Create Account. And you click Start, and you go from Start to a funded account in as little as 5 minutes. It's really fast. And, it doesn't take any time at all to really get set up. And you'll be able to get in. You can fund with as little as $100. So it's not like, stocks where you need $25,000 to do intraday trading. And you don't have to worry about massive margins. There's trades in there that I guess you could put up $800 if you wanted, but there's more than not. There's a lot of trades you can put up very little. So, I'm talking $10, $20, $50, per trade. So there's a lot of trades like that exist, and you can easily take advantage of them. And there's a lot of ways to trade Nadex. And so it's one of those things that if you're an option trader, you're going to love it because it's like, options made for day trading. But if you're not an option trader, you're going to love it because it's not as complex as options. You're not having to deal with gamma, theta, vega, all that stuff, and going to the the row and the interest rates. Of course, there aren't any right now. But you don't have to deal with all that complexity. So it's a lot simpler than options, and mainly simply because, I mean, they all expire, well, all but the weekly binaries expire within a day. And the spreads are a lot more like trading, the underlying market. So if you think that, pound dollar is going to go up, you buy. If you think the dollar yen is going to go up, you buy the spread. If you think it's going to go down, you sell the spread. And people hear the word spread and they start thinking, well, does that mean I pick a strike and I pick my upper strike and my lower strike? Is that a debit spread, a credit spread? Is that a vertical spread? Is that a diagonal spread? Horizontal? Like, they're all going to all the different spreads. It's a completely unique instrument. It's a Nadex spread. And I like to call it a box spread or a bull-bear box spread. So I'm buying the spread. That means I'm bullish, so it's a bull box spread. If I sell the spread, it's a bear box spread. And the strikes are already set. And if you go over here on Nadex, there's an area that's really helpful. And it's a range of markets. And so let's say you're looking over at Forex. You can click on Forex, and then right here where it says contract specs, you want to click on that link, and it'll sort of help it make a little more sense to you. I'll explain this to you. Let me zoom in on the page there. And what you'll see is they are actually listing all the different contracts they have. I'm going to scroll down so I can actually see. They call them bull spreads. Not really the best name. I'm hoping they're going to rename those to Nadex spreads soon, simply because they're bullish if you buy them, they're bearish if you sell them. So you just wipe out the word bull, act like it doesn't exist. It's a Nadex spread or it's a box spread. And scroll down a little bit further and you'll see the expiration times. And so what you'll see is like this expires at 8 o'clock. It's a 2-hour spread, which means it starts trading 2 hours preceding 8 o'clock. So from 6 p.m. to 8 p.m. and then 7 to 9 and 8 to 10 and 9 to 11 and pretty much every hour they're starting a new spread up. And then they'll also have some longer ones. They'll have some 5-hour and some 8-hour spreads. They even have 22-hour spreads, okay? And the longer it is from when it starts to when it finishes, the wider the spread will be. What do I mean the wider the spread will be? Well, when the spread starts trading at 6 o'clock, it automatically has a defined range of how wide that spread will be. That spread will be 100 pips wide. Notice this one, 5-hour, 8-hour, they'll be 250 pips wide. This one over here, you bet basically 22, or 20, 20 hours, whatever, they'll be 600 pips wide. Okay, so they're wider. Well, what does that mean, wider? Well, if the market is at, 1.5000, for example, and it's 100 pips wide, then they'll make it from 1.5000 up to 1.5100. And notice how many are there? There's 3 contracts. So if there's 3, then there'll be one above, 100 pips above where the market's at 6 o'clock, 100 pips below where the market's at 6 o'clock. And then there'll be another 100 pip one right in the middle. So like 50 pips above, 50 pips below will be the floor and the ceiling. Well, now, what is this floor and the ceiling? Well, the floor and the ceiling basically define your profit and your loss. I mean, you can't make any more than this, but you can't lose any more than this. So if I buy it, and it's, the price is just 10 pips above the floor, then I have a $10 risk. If it's 100 pips wide, my profit is 100 minus 10. So 90 pips. I can make 90 pips on the spread. And will I make 90 pips? Well, if it goes up 90 pips, I will. If it goes up 50 pips, I'll make 50. If it goes up 10, I'll make 10. If it stays flat, I'll get my money back. If it goes down 10 pips, then I'll lose 10 pips. If it goes down 50 pips, and my risk was 10 pips, I'll only lose 10 pips. And here's the very cool thing. Let's say it goes down, 15 or 20 pips. You had your stop like down there 20 pips lower, right? Well, if it goes down, you're down, but you're not necessarily out. Depending upon what spread you choose, actually all spreads, your risk is always capped. And so let's say that you used one where you're comfortable with the risk if it had max loss. So it goes all the way down. It could move down like 5 pips past your stop loss, but then get back in the trade. And then you're actually able to lock in a profit on that trade. And so you could actually have a potentially profitable trade that went against you but came back because you had until expiration. So 2 hours, you had 2 hours, or 5 or 8 hours, or 20 hours. So just depending upon which one it is. But the spreads are very cool, and like I said, it's like buying or selling a future or forex pair. It's really designed for those who want to do intraday trading, whether it be at night, in the early morning hours, during the day. So, there's all different time frames, different markets, and you can find out what hours everything trades by going to these contract spec pages. So I can, go up here and I can look at, if I want to look at the indices, maybe I'm big on trading the S&P or the Dow. I can go over here and click on contract specs. And then right there, I just scroll down again. Remember I said scroll down to where it says spreads, okay? And right here, I can see, here's the spreads, and here's how wide they are. So on the Dow, they're 100, points wide. On the S&P, they're 10 points wide. And it makes it really nice, really easy. They even have other markets like the FTSE, the DAX, the Nikkei. So all those are even listed on there. You can even trade international markets. And, it's depending upon what it is that you like to trade. And I would say, just like on the CME, there's certain markets I do trade, certain markets I don't trade. I don't trade milk. I don't trade orange juice on the CME. Why? Well, liquidity, there's all sorts of reasons for that. Bid-ask spread, liquidity, you get stuck in a position you can't get out, whatever. Or maybe just how it ticks or how it moves, or it's not volatile enough, or it's too volatile. There's so many different reasons why you would or would not trade something. Well, Nadex, I have a few of my favorite markets. And I can say all the markets on the binaries are fine. I have no issue on the binaries, but they're totally different than the spreads. Okay, so what about the spreads? Which markets on the spreads do I actually, prefer over other markets? Well, if I'm looking at the indices, the U.S. indices, then Wall Street 30, U.S. 500, and small cap are in my top. Basically, those are the three that I like to trade. What about NASDAQ, the U.S. Tech 100? NASDAQ is awesome to trade. NASDAQ is awesome to trade. It's a great future to trade, okay? You may love trading the Qs. And, I do trade it on the binaries, but I don't trade it on the spreads. And just like on the CME, there's certain contracts for certain reasons, you may decide not to trade those contracts, just like on Nadex. There may be certain contracts for certain reasons you decide not to trade those markets. So what would possibly be a reason why I wouldn't trade that market? Well, let's look at it, okay? Let's go down here and look at US Tech 100 and how it ticks. And what I'm going to do is I'm going to pull up the bot spread scanner. You can get a free trial of this over on our website, but I want to show you how it ticks. And this is sort of, this is why I usually don't trade the US Tech 100 spreads. Notice the US Tech 100, the NASDAQ, the NQ, it should tick right in quarters, right? So it ticks in quarters. It goes 0.25, 0.50, 0.75, that's how it works. Well, over on Nadex, the way that they built the instrument, for whatever reason, it doesn't tick in quarters. It ticks in one whole point. And so if the NASDAQ, if you have a bid-ask spread of, it's going to be small, only maybe 1 or 2 ticks wide, but that's really 1 or 2 points wide, okay? And people sort of confuse points and ticks and how they all work. So one thing I can tell you on all spreads that's awesome about Nadex is it's easy. You don't have to worry about quarters and eighths of cents and points, and you don't have to worry about is the tick worth $5 or $12.50 or 10 or 100. You don't have to worry about what the tick value is or what weird increment does it tick in, because every instrument on Nadex ticks in an increment of 1, whether it be 1 or 0.1 or 0.01 or 0.001 or 0.0001. And so I'm going to go into a little more detail on what I mean by that when we come back, so you can understand why I pick what spreads I pick when I trade. We'll be back right after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And it looks like we got a caller, and we got Garo. How you doing?
How are you, sir?
Hey, I'm doing great.
Yeah. Actually, I have two stocks. Do you have the time for the second or only one?
Let's knock it out, man. Bring it on.
Okay. The first one is KSU. It's Kansas City Southern. Yesterday, I bought it at $104 even, 300 shares. Should I keep it or sell it?
Should you keep it or sell it? So
Yeah.
I just want to put it right out there. Let's see. Well, we had basically a real volume bar right here, as you can see. They're on what was that, 227?
Yes.
Okay.
Yes.
And so right now, that's sort of acting as a magnet price. It came down, it hit it, and now it's pulling back up. It looks like it might hit that price.
Okay.
I would be tightening my stop as soon as it hit that price. So, because this really is starting to look like a trend reversal to me. So, in the way that I analyze markets. So, I mean, I could see it pulling back up to that point, but I would at least tighten my stop up to a break. Let's see, what you said you bought it at, what, 100?
Okay, your chart is a little bit dark. Now I can see it properly. Now, what is that number that you're talking about?
Okay, right here, the high on, let's see, what date is that? 228 on the 28th of February?
28th of February. Yes, sir.
107.32.
Oh, yes. Okay.
So
okay,
that was basically the high of the real volume right there, and you can see it's almost basically look like it's just above the close of that bar, but the high of that is basically the magnet price at the moment. So I don't see a reason for it to go much higher than that. I mean, as soon as it broke out above that, I mean, it was doing it on lighter volume, and then you can see when it went up. And, I mean, right here, there wasn't really any impressive volume on the up move, but we're starting to get more and more and more volume on the down move as it's going down. You said you bought it at, what, $100?
104, sir. 104.
Oh, 104. Okay.
Yesterday, I bought it at the 60 minutes when if the candle hit the SAR, I buy and sell by the SAR dots.
Okay.
So, it was 1 o'clock in the afternoon, your time, yeah.
Okay, yeah. Well, I mean, at the very least, I'd be exiting, or not exiting, but I'd at least be putting my stops at break even right now. So just in case it does decide to turn around and go south tomorrow. So, I mean, you got a nice little move right there, but you don't have just a massive amount of difference. I mean, what are we at? We're at 105. I mean, another couple bucks. I mean, that could still be in there. But the entire pattern to me looks bearish at this point. So I think we're turning over. I mean, we broke every trend line that exists. And, right now. So, it's ready to start moving on south. It did pull up pretty high after the breakdown. So, I mean, that probably could have been, maybe like you said, you're buying on the SAR, but it had just a nice pullback right there. But, at the moment, let's see, let me make my, update one of my indicators on here so I can tell you about the volume right there. I don't know why that's even set to that.
Yes,
right.
yes. I can see that.
So volume is, some of it's going to be a little hard to see, just, the screen resolutions. But, yeah, going right there, I mean, that'd probably be at least a take profit zone for at least part of my position. If not, half. I mean, but you're up a lot right now. I mean, that's a great trade. So, I mean, you're up $5 right now on the trade. That's a 5% return in just, what a day. So
no, I'm $1.70 up. That's all.
Oh, I'm sorry. You bought at 104. I thought you said you bought at 100. I'm like, man, how did you call the bottom? Yeah, you're right. You bought at 104. Okay, you're $1.70 up. Okay, yeah. But that would be my maximum target. I mean, if you're doing this, I mean, you're really playing the fade the trend method right now. So you like contrarian? I mean, you like doing contrarian trading?
No, but I get profit as $1 or $2. After $2, I get out. Yeah.
Oh, okay.
Yeah.
You definitely got your dollar. You're about $1.50, or I guess you're about $1 right now. So you got your dollar.
Yes,
so
yes.
if you're going in and scalping, I mean, you got that. I mean, don't give it back. That's you always want to look at your probability and your profitability. Basically, how often are you right? How often are you wrong? And then are you just your system? And then your profitability. How much do you make when you're correct and you profit? How much do you lose when you lose? And you just don't want to mess that ratio up by having, winning trades turn into losing trades. But, I mean, it definitely looks like it's setting up to go south. So I'd be very cautious about going long.
Very good. Do you have for the second one, sir?
Yeah, what you got?
PSX. PSX, I have not bought it yet. I want to buy it at 50-day moving average, which is 64.06. At the time, it's 62.75.
Why don't you stay right there? We'll look at it when you get right back.
Sure, sir. Thank you. Thank you.
We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know that you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right of the TFNN homepage. But if you don't have a mobile connection that keeps up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in radio talk shows. TFNN is able to teach all levels of investors the technical skills needed for trading in today's marketplace. In order to get the best information available, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, Garo, you still there?
Yes, sir, I'm here.
Awesome. All right, so you're trying to contemplate whether or not to buy PSX at the moment?
Yes, PSX, I want to buy it at 50-day moving average, which is $64.06, going up. At this time, it's $62.77. Should I wait until there, or should I buy it at a different price? I want to buy 1,000 shares of that. So I don't know, should I buy here, or should I buy after it crosses the 50-day moving average on 6 months?
Well, obviously, I can't tell you exactly when to buy. What I can tell you is I wouldn't buy at that 50-day moving average right now, because it's crossed under that 50-day moving average, and it does a beautiful job of respecting that 50-day moving average. If you go back in time and look at this thing, it has really, really respected it.
Yes.
And so right now it's actually closed below it, and it's turned that level into a resistance area right now. And so I'd be very cautious as to going into a long on PSX at all right now. So I'd also be short on that right now. I'd actually be waiting on a break below the current day's low for a new entry.
Where do you think it's going to go lower than here?
Well, I mean, there's several prices to look at. One of the biggest things, too, is see this volume bar, this massive down volume bar?
Yes,
it happened
sir.
right there on, what is that, the 3rd?
April, 3rd of April, 14 million.
I mean, yeah, that's a pretty strong commitment to the downside. That's way above the average volume right there. So, I mean, you're showing a lot of sellers, not a lot of buyers, okay? And obviously for every buyer, there's a seller, but, you're showing a lot of sellers below the market, not a lot of buyers above the market. And so, I mean, I manage my stops pretty, I manage them on every single drop and, every time if we're going down, every time it retraces and then breaks to a new low, that's where I'm tightening my stops each time. Right now, where would I see it probably go down to? I think our first area based on, volume. Right. And it's based on the last consolidation. I mean, it's really going to be where it just hit on the low. So right there, I mean, that's where it went to just now. Would be, let's see, that's going to be about $60.70. So right there, which I mean isn't, it's a decent little move right there. I mean, you could take your $2 out like you like to do on that. But it needed to break the low of the day before I get in. So I want to see that volume going in my favor. But, I mean, we saw, the market pulled back a little bit yesterday. The market pulled back a little bit today. But it didn't do so on any kind of impressive volume at all. And notice, like right here, I mean, we're getting a move up and the volume's increasing, right? So right here we see the market moving up, volume's increasing. But then all of a sudden, we get a move down, very light volume. Volume starts picking up on the way down. And then we get that massive move down. You'd expect to get a little bit of a bounce after that. So we get basically the market's exhausted, buyers and sellers alike, all hit at the same point. And then right here, you get a little bounce off of, they go down, fill some stops, go back up, see if they can find any more orders left before they punch it any further. But I'd be expecting a drop right now. I don't see a buy on this at all at the moment.
Should I short it here, right here?
The way I short is I make if I'm short on any kind of bar type I'm using, so let's say daily bars, is it has to break the low the previous day after a pullback. So like right now, today, our low is higher than yesterday's low, than Friday's low, right?
Yes.
So so long as that story maintains, then I'm going to wait for tomorrow's low to actually break the low of today. So let's say if we close the market right now, if tomorrow it breaks the low, so I want to get that momentum in my direction, because otherwise you end up shorting, and you can end up shorting the thing just keeps going up because you want to be counter trend. So I more want to sell when it's popping up a little bit, and I want to of course buy on the pullbacks. So I want to wait for a little momentum in my direction, at least breaking that low, and that shows that hey, there is some commitment to at least keep moving. And then as soon as that happens, then I'm going to be looking to either take profit or tighten my stop to break even once the previous low is hit. So like right here, see this low right here?
I got it.
So if I took this short, then what would happen is when it came down and hit this, I would either be taking like partial profits or I'd be at least moving everything to break even. All right? So now that gapped right below it, so it would have been really hard. You would have had a little bit, you basically missed the trade because of the gap on that day. But let's say tomorrow it doesn't gap below it, it opens up wherever, and then I'd get, go short right here, then just right above this low, because that's where the market stopped filling orders to the downside, right? So at this point, there's no more, there wasn't any more sellers, at least at the moment, below this price. So I don't want to wait until it gets to that price before I at least either take profit or start trailing my stop. So the second it gets just within a few ticks, cents, whatever, of that low price, that's where I'm either going to immediately take, like I said, half my profit, or at the very least, move my stop to break even. But I want to wait for that break below the low, and I want to start doing some, profit management as soon as it gets within a few ticks of the low of yesterday's low as well. So and now let's say the day after, let's say we keep going and we get a bar that goes higher and a bar that goes higher. I'm still going to be waiting on a break below the low, and I'm still going to have that same profit target. So. For the first half of my position. It makes it very simple, and my risk, by the way, is going to be the high since the low. So like see right here, we have this lowest bar.
Right.
Okay. My risk is going to be the highest high since or including that bar. So wherever that is, that's my stop loss. And then this is my take profit. And there has to be a 1-to-1 risk-reward ratio for me to take the trade at least. So like right there, I mean, this would have been your highest high, so your risk reward was pretty off. So that's not. Not only do you have the gap where you couldn't have got in, but even if you could have, your risk to your risk being all the way up here to your reward, your minimum reward being right here, trade isn't worth it. This trade could definitely set up for a good risk reward 1-to-1 ratio, and you just put your stop right above the high of the highest bar. So if it keeps trailing up and this is a high tomorrow, and then the next day it breaks below, well then the high of that, the highest bar since is where you're going to put your stop, and then you're going to take profit right above the high right here. And so again, that's on half, because now your method where you're going for $1 or $2, that's probably where you're going to take all your profit.
Yes, yeah, I don't.
So if you're trying to really catch the trend, that's where you'd actually, start trailing the stop down.
Very good, very good, very good. I do thank you very much, sir. I appreciate it. Thank you.
It's always a pleasure, girl. Call in anytime.
Okay, sure, sir.
Right.
Bye-bye.
Bye. All right, Garth, thanks for calling in. Let's go ahead and check on where everything's at. Let's go and do a quick market update, then we'll come on back to the spreads and the ticks. Right now, we have the S&P up 2 points. We have the Nasdaq flat on the day. The Russell is up a point. The Dow is down 19. Gold currently is down 3, with silver is down, basically flat. And copper is up 0.81%. Oil is up 41 cents on the day. And corn right now is up about $4 on the day, with soybeans up $14, over 1% on soybeans. Euro dollar up 20 pips. Pound dollar getting pounded right now down 86 pips. Aussie dollar up 5 pips. Euro yen, pound yen, US yen, all flying. Got euro yen up $1.89. Got pound yen up $1.24. Got US yen up $1.38. Caught a nice US yen trade this morning. Looking over at USD CAD, it's up 26 pips on the day, with USD franc is basically flat on the day, just down a couple pips. All right, so now let's go back over and let's talk about what we're talking about on this tick thing, how everything on Nadex, they've made the ticks really simple. And that's one of the confusing things. You can start getting into Forex, and you're like, how do I do all this FX conversion? And you get into futures, and you find everything ticks differently, and every value has a different value, and it just gets complex. Well, with the spreads, we're going to go through a few different examples right here. I'm going to get, here we go, we'll get that one, and then we'll throw in a pair over here. We'll do this one. All right. So US 500. So what I want to show you on this, before we go into really any details, just look at this, is it's 0.0. Okay, so notice how it's 0.0. It could be 0.1, 0.5, point whatever. But it's that last digit in the floor or ceiling, that's your tick. So that means it moves in 0.0, 0.1, 0.2, 0.3, 0.4, 5, 6, 7, 8, 9, and then it'll go to 15, whatever. So that's how it actually quotes. You can also see that in the quote over here. You'll see 1547.4. It could be 0.5, 0.6, 0.7, right? So that's your tick. The last increment in the quote or in the floor ceiling, either way, the last increment in any of the numbers right there is your tick, meaning it moves in 0.1. Remember, all of them, and you're going to see this, move in some sort of increment of 1. So 1 or 0.1 or whatever. All you have to do is look at the quote and you know. This moves in 0.1. So every time it moves 0.1, that's $1 change in value, either increase or decrease in value. That simple. Just an increment of 1. Okay? So once you know that, then you're like, oh, wow, it's really easy, because if I'm going to, if it moves up 10 ticks, 0.1, 2, 3, 4, 5, 6, 7, 8, 9, 10, then that means I made $10. If it moves down 10 ticks, I lost $10 if I was long. If I was short and it moved down 10 ticks, I made $10. If it moves up 10 ticks and I was short, I lost $10. So really simple. So that's an example of something quoted in 0.1. And we'll come back to NASDAQ in a second. And then right here on the Wall Street 30, it quotes in whole points, just like the Dow. So every time it moves a point, that's a point change in value. Okay? So 1 point is 1 tick. 1 tick is $1 on every spread. And one thing to highlight, I want to highlight right here on the S&P 500. This is unique for the S&P 500 corn and soybeans. They actually just expanded the hours for corn and soybeans as well on Nadex, but made them where they expire later. But now what they've done is, you go in here and look at it, it's 0.1. I don't know if you know this. If you're not a futures trader, you may not know this, but the ESE mini futures tick in quarters. It means they go 0.25, 0.50, 0.75, 1. This actually ticks tighter, okay? Meaning it moves in smaller increments. It ticks tighter than the E-mini futures. So it actually is what places the US 500 on the top of my spread list, because it ticks so tight, and it's, of course, extremely liquid. Go on down here to Wall Street 30, ticks just like the Dow futures in single increments of 1. Notice it's not 0.1, it's not 0.01, it's just 1449, 450, 451, 52, 53. Every time it moves an increment of 1, that's $1 change in value. Let's go down and look at the Russell. Russell also is ticking in 0.1. So just like, by the way, the Russell futures. And so every time it moves 0.1, then the other one moves in 0.1. And let's look at natural gas. Natural gas ticks in 3 digits. Okay, so every time it moves in 0.001, 0.002, 0.003, every time it does that last digit increment, always a movement of 1. Now, it's 3 decimals over, but it's always a movement of 1. So it's not quarters and eighths of cents and weird stuff like that, okay? Always an increment of 1, always worth $1. Ticks like the underlying market. Let's look at oil. Okay, ticks like the underlying market, right? Ticks in pennies or cents, whatever you want to call it. So when it goes from 93.24 to 93.25 to 93.26, every time it moves a penny, that's a tick. And by the way, what is every tick worth? Well, on every spread, it's always worth $1. Okay? What about USD yen? Well, that moves in 4 ticks, right? Pips. So every time it moves from 3005 to 3006 to 3007 to 3008, that's a movement of 1 tick. So it's that last digit. It's always a increment of 1. And what is every tick worth on every spread? It's always a value of $1. So it doesn't matter if you're trading euro dollar, S&P. It doesn't matter if you're trading the DAX. It doesn't matter if you're trading the euro yen, which is this where it's where it can get confusing for some people because they're going in and they're like 2 different currencies and I don't understand FX, and it's up and down. Okay, you can call it instrument A, B, C, D, E, F, G. It doesn't matter. Okay, it's up and down. And how does it tick? In 1. So when it goes from 75 to 76 to 77, every time it moves an increment of 1, okay, that's, in this case, it's, pennies or whatever, but every time it moves an increment of 1, then that's worth $1. You don't have to convert it from euro yen to euros to dollars to figure out what the tick is worth. It's always an increment of 1. And every increment of 1, every tick is always worth $1. Now, where that 1 is will always be the last digit it's quoted in. So all you got to do is look at the quote. The last digit is always the tick. So 6, 7, 8, 9, 10. If it moves, that number moves by 1, that's a $1 change in value. And now you can go over and you can trade things that quote in yen. You can trade things that quote in euros, like the DAX. You got the Nikkei you can trade in. You got the FTSE over there. So, there's all these different markets you can trade. But now instead of dealing with all these weird, increments of ticks, like quarters and, like all this different stuff you're trying to figure out, you're trying to learn what is the value of every tick size. Every tick size is equal. Every tick always moves in an increment of 1. And that 1 is always the last digit of the quote. It doesn't matter where the decimal is. The 1 is always the last digit of the quote. Okay? So if you get that down, that concept down, and all you got to do is stare at it for a couple minutes. You'll figure it out pretty quick. But right there, whatever this last digit is, every time it moves 1, that's a $1 change in value. It doesn't matter what market it is. You don't even need to know the name of the market. It doesn't matter because they all work the exact same way. So much simpler. So much simpler. All right, so remember, I was starting off and I was saying, hey, you know what? There's a couple markets that, I sort of shy away from. Just like on CME, there's markets you shy away from. Well, on NASDAQ, Nadex, the way they quote for NASDAQ is they quote in whole numbers. Remember I said US 500 was even better? It ticks tighter. It ticks in dimes instead of quarters, like the futures. Well, on the US Tech 100, instead of ticking in quarters, or instead of ticking in dimes, even better, because everything has to tick in at 1, so they could have done 0.1, but for whatever they do, whole numbers, then it actually has to move an entire point. So if you have a 2-tick bid-ask spread, because on this, a tick is the last digit, that's a 2-point move. Okay, that's an 8-tick move on the actual underlying futures market. So now you have an 8-point or 8-tick bid-ask spread, and let's say the thing moves 10 points in your favor, and you add a 2-point bid-ask spread, you made $8. Okay. Now, I understand that, there are smaller sizes, like you'd have to do 5 of these and, all this other stuff. But that's one reason I shy away from, that's really the main reason I shy away from the NASDAQ. And so I'll talk about a couple of the other ones I shy away from. But right now, all the other U.S. indices, I like them a lot. So we'll talk about the other spreads when we get back right from this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And what we're looking at right here is just checking out, talking about, how it ticks. And we're going into the spreads and how they tick. And, these spreads right here tick 0.1, which is great. But down here, Wall Street, that's awesome. Ticks just like the underlying market. But the U.S. tech, we talked about how it's ticking in whole points. So that makes it not my favorite one. Doesn't mean it's bad. Doesn't mean it's good. Doesn't mean it's whatever. You got to see they're really small. See, they're only 30 points wide. Like risk 9 to make 17 versus, up here like risk 6 to make 90. So they're really, really small too. So there's a few reasons. And that doesn't mean they're horrible to trade. They're just really not on the top of my list. Now, as far as the binaries, great. I trade them. Okay. But I sort of shy away from them on the spreads. Now, over on the foreign indices, they're obviously going to be lower liquidity. They're not as high as demand. They're, early morning trading, nighttime trading. And so just due to that, due to the bid-ask spreads, how they tick, not as big of a fan of those. And you may like them just great, or, you may love the binaries. But on the spreads, I don't trade them that much myself. And then let's see here. If we go over the metals, okay, I like gold a lot. All right, I like trading that. Silver and copper, they sort of have the same issue where they skip a tick, just like the U.S. Tech 100. So does Germany and FTSE. So, I'm sort of shy away from those a little bit as well. And why am I telling you this? Because I want you to have a good experience trading with Nadex. Just like I wouldn't want somebody to go to the CME and start trading milk and orange juice, okay? You want to know what are the best markets to trade on any exchange that you're trading on. Certain markets are more liquid. There's a lot of markets on CME that are on ice, but I wouldn't touch them with a 10-foot pole because of the liquidity, the bid-ask spreads, everything else. So it's not necessarily the market that makes it good or bad. It's the market on the exchange. On that exchange, is that the ideal product you want to trade on that exchange? And that's important whether you're trading Nadex, whether you're trading CME, whether you're trading ICE, whether you're trading SGX, no matter where you're trading in the world, you want to know what are the best products to trade on those markets due to things like liquidity and bid-ask spread and, volatility that's acceptable and things like that. And then, corn and soybeans are good. They're a lot lighter in the volume. And so you just want to be aware of that. You're not going to be able to trade real heavy on them. Like 10 contracts versus like 100 or 200. So, you're going to be a lot lighter on the corn and soybeans, but it is cool how they tick. They tick I want to say they tick 0.1 just like so you go over your ticket in 0.1, which is even tighter than actual corn. So I like that a lot because corn ticks in, 0.25. Same thing with soybeans. So I do like them. This was the volume was a little bit higher, but volume is increasing, and that's one of the reasons they're expanding time frames and things like that. Now, what about Forex? Forex, check. I like all of them. So I think they're absolutely fantastic. But so I got basically the Forex pairs, and then I'd put, the indices right here. They'd go up there on the top. Then I'd add in gold, and then I'd add in corn and soybeans. And from there, I'd add in natural gas and crude oil. They tick just like the underlying markets. They can have a lot of premium. So I'm focusing more on those at-the-market spreads, where the market is priced right near where the spread's priced, so I'm not dealing with the premium issue. Then after that, I'd go down to the Nikkei, but it has a really wide bid-ask spread because just, low volume. And after that, then I have the remaining, the FTSE, the Germany 30 DAX here. We got the NASDAQ. We have silver and copper. Those, I basically, I pretty much avoid those just because of how they tick. Now, I do trade them on the binaries, but I do avoid them mostly on the spreads. And I want you to have the best experience possible when you trade on Nadex. If you want to know my top list, then I'd probably pull off, most of this right here, and I'd be focusing on, and I may remove the ags, not because I don't like the spreads at all, but just because of the volume. So I'd probably go right here towards these indices, the Forex pairs, and gold. That'd be the main markets I'd be focusing on. Unless you're trying to just mirror the underlying market, then you can add back in crude and natural gas, simply because if you're doing the at-the-market spreads, they're really, really good. You just want to watch out for that break-even distance premium that can get you. So, but anyways, we talk about a lot of this stuff. I give you a lot of tutorials in here. Check it out over on TFNN.com. Check out the Diagnostic Box Spread Analyzer, tutorials, deviations, all that. And help desk. I'll be glad to help you with any questions that you have. Hope you have a great day, and I will see you tomorrow. Stay tuned. We have another great show coming up for you right after this.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.